Hello, friends. Today we're taking a look at Ruger Company, ticker symbol RGR. We'll be looking at the last 5 years performance of the stock. We'll also be looking at a couple of news related to gun companies and how the elections elections here in the United States tend to affect the price of the stock. We'll be also be looking at the last earnings report and look at what analysts are projecting for the next earnings coming up in February 21st. Then we'll jump into my Excel sheet and we'll be looking at the last 10 years of revenue, earnings, free cash flow, and book value, as well as the debt level, the dividend history, and we'll try to calculate a fair value for the stock. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. If you like my content, please leave a like or subscribe to whether you're finding us in YouTube or a podcast. I try to read all the comments and respond. I really appreciate the support that you have been giving us. So let's jump right into the stock. Ruger in the last 5 days is being up by a little bit. In the last month, it has been going down by 3.5%. The last year, it had a big drop. It's down 19.8%. This big drop that you see here is mostly related to I think it was somewhere around 15% on earnings, which we will be discussing. In the last 5 years, it has been up. It has been down almost 21%. And as you can see, the stock has been staying kind of up. This stock is very cyclical, and this kind of company, the gun industry, is very cyclical. The P ratio right now stays somewhere around 14. The dividend, their estimated yearly dividend is $1.27, which is almost 3%. But I will not be paying attention to this because Ruger tends to they don't have a constant dividend. They tend to change the dividend depending on their, I think it's their earnings. I think it's like 30 or 40% of their earnings or their cash on hand. I don't remember it right now. So we'll be looking at those things. I used to own this company probably somewhere around here on September of last year. No, not last year, of 2022. And then they paid a big $5 special dividend. So that's why I will say not to pay too much attention to the dividend. The dividend is pretty nice to receive from the company. Now, if you don't know who Ruger is a company that makes weapons, especially firearms. They make pistols, they make revolvers, they make rifles, and I believe they also started innovating into shotguns. I may be confusing it with Smith & Wesson, since I am paying attention to both companies. These are companies that I really like. Now, these companies, especially for this year here in the United States, going into a presidential election, they tend to do very well when people believe that a Democratic president may win. Now, I'm just going to give you a disclaimer. I am not discussing politics here. I'm just talking about the relationship between the parties and the purchases. I am trying not to tell you what is my preference. However, looking back here at this study that they did, when President Obama won his re-election, it scared people into buying guns. So, and part of the reason is because the Democrats tend to be more pro gun control. Whenever Hillary Clinton and Donald Trump were, after Donald Trump won, the Smith & Wesson and Ruger companies fell 15% because they thought that Hillary Clinton was going to win. So that tells you, that is just an example of how much a company, a, a, a gun company can rile up before an election, especially if a Democratic person wins. Now, it could, whether you like Trump or whether you like Biden, it seems to be like that's what it's going to be here in the United States. The truth is, the last time Biden won, so the possibility that the market is going to be putting or thinking that Biden will win again, it might leave for a growth of somewhere between 15 to 14%, if not more, in the next couple of months. Now, Fox News, Fox Business explained that part of the reason is because a lot of Republicans, number one, or gun owners, they will not like, they want to own guns before they get banned. And also, there is a lot of worry about the Democratic Party's rhetoric about defunding the law enforcement and doing different things that will either make it, from the Republican perspective, a little more dangerous situation, less law enforcement, more restrictions on guns. So I'm not going to get too much into the politics of all, but I just want you to know kind of the idea behind why there is, at least my thesis of why I believe the market, which tends to be a little more favoring of the Democratic Party or hating of President Trump, I think that it's going to push this stock up as a lot of funds are going to be thinking that that's where things are going to go. In the past earnings on November, they missed almost by a lot, over 50% on earnings, which it was kind of expected, because you will see that the COVID era, the COVID years really push the gun industry earnings and revenue and all of that really high, because a lot of people were worried about what it was going to happen, at least here in the United States, where we can own guns. The revenue dropped by almost 18 millions, and the upcoming earnings we have projected of 67 cents on earnings and estimated revenue of $134 million. There's only two analysts, and they have review down. There's a lot of companies that do not like. There's banks that do not lend money to gun companies. There's a lot of Wall Street companies that don't like to review. There's not too many analysts. That's why whenever normally you see that I try to discuss what analysts are saying, but there is not too much information from analysts because they really don't like this industry. So with that said, let me just jump into the spreadsheet. But if you would like to get a copy of the spreadsheet, or you would like to support me, the channel, you can go to my Buy Me a Coffee website, in which you can get the Excel company, the Excel page, and also Where I'm going to be starting in February, I'm going to be starting to add more information there, and I hope that that will be something that you like. Whenever we look at the revenue, as you can see, is very cyclical. It goes up and down, up and down. And in 2020, 2021, this is where when COVID happened, you can see that the revenues went really high compared with the past 10 years. So in the past 10 years, it's been kind of flat. And in the past 5 years, it once again, 2.2%, I consider it kind of flat too. When it comes to earnings, once again, it's very cyclical, and once again, you can see the $8.87 of earnings on the COVID year that got a really, really big push, especially with all the different things that happened here in the United States when it came to law enforcement and stuff like that. So, but if you're looking at the numbers in the past 10 years, it's down almost 6%. In the last 5 years, up about 2%. Once again, I will be looking more at what the median, and the median in the last 10 years is 3.32%. Now, profit margins, they stay a little normal at 15%, which is pretty good. Free cash flow, once again, is very cyclical. Once again, on COVID, it was pretty high. The medium for the free cash flow is $3.69, and that's what I'm going to be using for my calculations. And the free cash flow margins are almost 20%, which is really, really good. This is part of the reason why I like the company, but I like to own it as a more like a trade, like a swing trade or a short-term trade like this year. I do, just a disclaimer, I do own this company also. I am not a financial advisor. I'm just a YouTuber sharing my love for stocks. Do not make any I don't make any recommendations. Do not make any financial decisions based on my opinions. So, looking at the book value, as you can see, it has been going nicely up, almost 7 point in the last 10 years for 7.4%, and in the last 5 years, 4.5% growth. The return on equity is amazing at 24%. Normally look at 15%. Return on assets at almost at 19.2%, and return on invested capital at 26.3%. That is amazing. Those are amazing numbers, and that's part of the reason why I like this company. Dividend, as I told you, they're very cyclical. They're very tied to a lot of different things in to their finances. In 2020, I think they had a special dividend. On 2022, I know for sure they had a $5 special dividend that I received when I owned it. When it comes to debt, they really don't have a long-term debt, even though it shows here in the numbers. What they tend to do is they have a line of credit. Like I mentioned, a lot of banks do not lend money. So this is another good thing about the company, is that they do not have any debt. When it comes to shares, in the past 10 years, they have repurchased an average of 0.8%. In the last 5 years, it has gone up a little bit. They have issued a couple of shares. Nothing that I will worry about. The analysts that I was able to find, they think that it's going to be growing in the next 5 years about a 3%. So kind of with inflation. These are the historical multiple valuations, and I am using the medium for the average. Instead of the average, I'm using the medium of the last 10 years on earnings and free cash flow. So that will tell us that a fair price will be somewhere between $50 to $56 a share. When we look at the payback time, growing it at 2%, using the And I'm going to be focusing more on the average because it is a very cyclical company. So using a 3.65 free cash flow, medium number of the past 10 years, growing it at 2%, and gives us a value of close to $69. When we look at the discounted earnings valuation, growing it at 2%, the average of the last 10 years, the medium of the last 10 years was 3.32, growing it at 2%, and discounted it back after applying a 15 PE, we're looking at $27. The owner's earnings valuation gives us a really good number between $70 to $90, and partly is because they do not have too much depreciation. Their payables are very low, and their capital expenditure it's not too much. So they do make a lot of income, and that is very good. They're a very well managed company. So the fair value, if we look at the average 5 years, we're looking at somewhere around $59. If you put a 25% margin of safety, you'll be at somewhere around $44, which is pretty close. It's actually exactly where it is right now. So I hope that you like this video. Please leave me a comment. Let me know what you think, anything that I may miss, and I will see you in the next video. Thank you.